So last month when I introed my month-end video, I left you kind of wondering what had happened. Well, guess what? This month, it's even worse. So last month we finished $447,000, and this month we're only sitting at $448,692. Not a huge amount of growth. But by the end of this video, we're going to have gone through all the accounts like we do normally. We're going to look at the retirement calculator and we'll see if we're on track. For those of you who are new here, my name is Darren. I'm a regular Canadian who started investing late in life and improving every single day that it's never too late to start investing. We're going to start off with the retirement calculator because it sets the tone for where I need to be when it comes to retirement. And I have access to this through the Enriched Academy. They're a Vancouver-based company. If you're new to the channel, the link is in the video description below. It's a great calculator to figure out what you will need in retirement and set some goals for yourself. So we can see that I have about 8 years before I'm going to retire. Now, I want you to keep in mind while you're watching these videos, I started my investing journey in April of 2023. At the age of 50, I had no knowledge of DIY investing whatsoever. I had let somebody else do that previously for me. And I decided to take charge of our situation when I realized that we might not be that prepared for retirement. So I think it's important to set goals for yourself. When I started this channel, I wanted to document what I'm doing and sharing it with you guys, which is what you see here. But I also wanted to share the things that I learn. And this one's pretty big because this tool will set the tone for how much you will need to put aside before you get to retirement based on a number of factors. So when we look at this, we can see that I have 8 years left before I will retire. I'm currently 52 years old. Birthday's coming up right away in a couple of weeks. My desired retirement date is 60, and I'm looking at a life expectancy of 88. That life expectancy could be much longer, and that's why this portfolio needs to be able to outlast that number, and you'll see when we get to the numbers that we're actually probably going to be prepared for that. I have to catch up with as far as the amount of money that we're going to put aside. So right now, the annual contributions to this account are $40,000. Now, to some of you, that will be absolutely mind-blowing. I started at 50, so my time horizon is not nearly as long as some. I would say it's somewhere in that 10 to 20 years because I have a pension. So the time that I'm going to start drawing down on this money could be a lot later. Could be beyond, the next 8 years when I retire at 60. Could be more like 65 or even 70. So we can let this sit and compound for up to 15 to 20 years. A lot of my target audience starts at about 45 years old. It could be a little bit younger than that. You can draw these numbers out. So you could look and say, well, I don't need to put that much money aside based on what the calculator said. It could be far less. These are just my numbers. The next part that's really important is determining how much money you want to live off of. Now, I will admit I learn a lot of lessons on this channel and I share them with you. I was anticipating my annual income in retirement to be around $80,000. Now, for those of you that have been following for a while, you'll know that my dad passed away in November. And as a result of that, my mom, I'm an only child, so I have to prepare for helping my mom with her finances as she ages in life. And so she took some time to introduce me to their finances and so on and so forth. And in that, we had a conversation and I asked my parents, what would be a reasonable amount of money to expect to live off of? And of course, the number was significantly higher than I anticipated. Now, that's not a bad thing because I have prepared this portfolio to allow for that. Something else to keep in mind, you're probably scratching your head about, is I've got 2 young kids that are 11 and 12 years old right now. So when we turn 60, those kids are going to be 18 and 19. Now, if you have kids, you probably realize that you have to have some legacy money for those kids. So when I say we're going to live off of this money, this is including us helping our kids because they'll be early adults in their, early 20s and as we age. So I want to be prepared for us to handle that. We have to think ahead for those types of finances. So the current value of our portfolio is important to what the future goals will be. And I've given the expected return on this account to be about 5% in the future. So let's look at what the final numbers look like. So in the next 8 years, we need to have an income goal of $663,000 on top of my pension. So that means that we have to have that money set aside, ready to be drawn down on by the time we retire at 60. Again, these are estimated numbers. So we're on track based on those contributions that I told you. So I don't need to put $40,000 away every single year. But one critical lesson to learn is whatever you decide to put aside, maybe you decide to put aside $300 a month or whatever it might be, you have to learn to live without that money, whatever you decide that is. Now, obviously, $40,000 is an entire salary for some people, so that's not a realistic expectation. But my point here is that you need to be able to set that kind of money aside. Now, my wife and I are at the ends of our careers, so we're able to generate obviously more income now than we did when we were first starting out in the industry. But the one thing that I wish we had done, obviously, if I had known way back then, was starting to put away that only $100 a month, if you will. If I had started putting $100 a month, that would have added up over time to get us where we are today. We've set ourselves up to reach this goal of $663,000, and it's really not that far away. So right now we're $213,000 away from that goal. That is very realistic in the next 8 years. Now, I use two different tools to track my portfolio. One of them is Passive and the other one is Wealthica. Both of these tools combined together allow me to get a big snapshot of the entire portfolio. So on the left-hand side of the column, we can see all of the accounts that are obviously part of our portfolio. We have our spousal, our kids' TFSA, my wife's RRSP, my TFSA, and all the way down to the emergency fund, which we will get to in a little bit to see how that one's performing, because that's pretty interesting stuff. Definitely not what I expected. And then, of course, I have a bit of Bitcoin. So overall, we can see that. And I'm filming this on January 2nd, by the way, guys. It's a few days after. I did take the total right at the end of the trading day on the 31st, which is what I read to you in my intro. So as of today, the portfolio has actually gone up to $451,000. This is all time since the time that I started this account. So if we go back to April of 2023, when I started, in that first month, I got $1. And if we look, we can see over time that there's just been a steady increase in all of those dividends and distributions. Now, something to keep in mind is if you go back and watch my playlists, and you'll see that I started introducing some covered calls. So as a newbie investor, learning about these covered calls, I felt was important to actually try them and see how they perform. Even though the information that I'm reading says that they don't perform as well as other funds, I'm trying to figure out, how would they fit into a portfolio? Would they be good in retirement? I definitely can say they're not good for someone who's starting out investing, but that's why there's such a big change in the dividends that you can see here. So there's quite a spike in this past year, and that's because I had introduced these covered calls, which increases the distribution. But I'm not sure about total returns, and I'm going to be doing my year-end video coming up next, and we'll be able to go through that and just see, what's gone on over the last year. So this particular month has been my biggest month as far as distributions and dividends go. One thing to keep in mind is not all the funds I hold distribute on a monthly basis. Some are quarterly and some are actually every 6 months. So the total this month was $2,621. And I noticed that there's one missing, which is XEI. That one pays out every single month. I find that sometimes there's a bit of a lag at the end of the month, and it will get reported in January. But nevertheless, we can see that over time, as you add more money, and that's the key, is you need to keep contributing in that accumulation phase of your investing journey. Your money's going to grow, but it grows more when you continue to add to it. And that's why I was emphasizing, and I have emphasized in the past, that after you pay all your debts off, decide how much of your income you're going to contribute to your investing. The number that I've always said on this channel is about 20%, but you can decide what that looks like. It doesn't have to be 20%. Maybe you start off with 5% because that's what you can afford. And then I would suggest that you steadily increase that number over time. Again, keeping in mind, I'm so late at this, I need to make up time by making bigger contributions. But the further you are, like younger you are, the less you need to do with that, because that compounding effect will really help you. So when we look back over the entire time I've been investing, keeping in mind we're going all the way back to when we had made $1, we're averaging $755 a month over the entire time. And I'll break this down now. I'll go over the last year, and then I'll go over the last month. And the total distributions and dividends that have been earned by this entire account up to date are $25,000. So that's $25,000 cumulative from April of 2023 all the way to December of 2025. So looking at the last year, because that's kind of when some of the changes that I made kind of came into effect when I was moving some money around, which you can see in this, this sort of jog up in the graph here. We'll go down, and I do make regular contributions every single month to the portfolio. So right now, if we average over the last year, we're making $1,200 a month in distributions and dividends. Starting back in January of 2025, we had $1,257. And if we go all, like I said, all the way forward, we're at $2,621. So our annual dividend income right now is $14,532. Now we're going to break it down by the month. So in the past month, I contributed $6,286 to the portfolio as a whole. That's to the different accounts, both TFSA, spousal RRSP. So in that time, we know the market was trading really flat. But as I said, we got some considerable distributions and dividends this month at $2,621. The first account that we're going to start off with is my spousal RRSP. For those of you who don't know what that is, I make the contribution to it, and then my wife takes that money out later in life. So we're cost sharing. So income that I make then becomes her income, which she will be taxed on later. And my wife doesn't have a pension, so she'll have a lower tax bracket when we retire, and therefore what will happen is she will pay less tax on that money. Now, if you're younger than me, you might be using up more of this room a little bit more quickly, but the TFSA and the RRSP are absolutely fantastic accounts, and I have a ton of room left in them for obvious reasons because I started investing so late in life. So here we can see that I have an asset allocation set up in this account, and you can see, like for instance, up at the top here, we have 30% allocated to VOO, being the S&P 500. And you can see between the green and the blue line that we have some room in there that we need to add some more to that part. So if I was to put some money into this account, it would recognize that. And then what it would do is it would suggest what to buy in order to get the percentage from 28.3 up to 30. And that's one of the best parts I like about passive. Link is in the video description below if you are interested. Now, I just want to take a moment to acknowledge the fact that the channel is growing so quickly. And like I've said in a lot of my other videos, there are a lot of you that watch that are not subscribed to the channel. It's a free way to support the channel. All you have to do is hit the little subscribe button and the follow, and as soon as I launch a new video, you will hear about it so that you can watch it. I'm almost at that 6,000 subscriber mark. I was hoping we'd hit it by the end of the year for 2025. Didn't quite get there, but we're pretty darn close. So thanks so much for everybody's support. And this year, as I pointed out, I would really like to get to that 10,000 subscriber mark, and we are well on the way. So thanks so much for supporting the channel. Now, one of the other things that I use, the different brokers I use, is Wealthsimple and Questrade. I find Wealthsimple is really good for beginners. They've made so many changes from when I first started using them back in April of 2023 to today. They've essentially become a financial institution, not just simply a brokerage, and they offer a wide variety of products for people. But for the investing side of things, they make it so simple. You can do everything from your phone when you're out and about on your day-to-day, and then you have also this desktop version that you can see here as I'm talking to you, which a lot of people, when I'm showing you my passive results, people want to see the results from the Wealthsimple side. So this is the spousal. So I'm looking at it from my side of the account. And consequently, we can see that I transferred this money. So I had this money over at Questrade. This was one of the changes that I made this year. And then I transferred it back to Wealthsimple. Honestly, not too pleased with Questrade, but there is one really important reason that I moved this over, And that's because Wealthsimple is going to offer Norbert Gambit coming in 2026. Now, they have not decided exactly when that date will be, but one of the biggest reasons that I was using Questrade was because of the ability to convert Canadian funds to US funds with Norbert Gambit. And now, with Wealthsimple going to offer that, I don't need to do that anymore. So I transfer the money over. And of course, when you move money back and forth, different brokers will offer you incentives. So that's why we can see this big spike up. That's all that was me moving some money. So since then, at about that time when I moved the money, the account was sitting at $130,317. And we can see it's been pretty flat for the whole month. In fact, there was a bit of a dip there where it dropped down to $128,000. And then we just kind of been trading sideways, haven't really grown much. And keep in mind, I did add money to these accounts. Okay, so this is the spousal RRSP, and we're specifically looking at the activity in that account just for the month of December. So we made a contribution of $2,050 to that account. The rate of return in that account was minus 0.58, so obviously not performing very well. But as I said, you're never going to see that every single month. You're not going to see strong performance. This is part of the way things go. You just have to accept it for what it is and stick to your plan. Once you come up with a strategy of your investing and how much you're going to put in there, you just need to stick to it. You can't look at this stuff like this and panic, because some people will do that. They'll look at this and say, oh my gosh, I'm losing money, which effectively, I mean, look at that. Lost $1,000 over the course of the month in this portfolio, but that's okay. It will bounce back. You just have to be able to ride that out, which is an important point when it gets to retirement. You need to have some liquid cash ready to go when it comes to retirement, so that if you had to go into one of these accounts, you're not losing money in those unrealized costs. As soon as you sell something, that is now a realized loss. So you need to be prepared for that when you get to retirement. So right now this account averages $881 on the month. So I told you that I use Passive and Wealthica. So Passive provides me a bit more in-depth look at how to, what securities I'm going to buy, how much is in each account, and so on and so forth. But the nice thing about Wealthica is, from a snapshot perspective, it brings all the accounts together in one line where I can have a quick look and see what the overall performance of each fund is. So we can see at the very top, we have VOO. It'll tell me how much I have in book value and what it's actually worth in the market, how much is weighted to my portfolio, and what the all-time returns are. So just for that one fund across all of my different accounts, we have a return of 9.27%. Now, I don't know about you guys, but before I started DIY investing, first of all, I thought the stock market was scary. It was a place that, only certain people could put their money in, and there was always that possibility that you could lose your money. When I look back, when I grew up, and even when I was older, a savings account might have paid 1 to 1.5% on your money. So to see that I could earn 9.27%, that seems like a good return to me. I like to estimate that I might get 5% on my money. Well, clearly that's not what's been happening. Now, markets have been really strong, and I acknowledge that, but still, to see a 9.27% return on your money, I think that's pretty good. So the other part is that I could break down each of the accounts if I really wanted to, by looking at them from the perspective of what's held in each account. And again, it's an overall snapshot: how many shares I have, how much the book value is, and how much the returns are, and so on and so forth. So this is a nice tool to quickly get in and have a look at things, as opposed to breaking it down to the cellular level that you see in Passive when it comes to the different transactions. So from time to time, what I like to do is I like to scroll through Wealthica and just have a quick look at how things are performing. And we can see right here, this red is what stands out to me. So then, of course, I would try to figure out what is it. Well, in this case, it is a covered call. That is HHIS. And it is a pretty big position within my portfolio right now. So it's something that is far riskier than other positions that I hold. And having 5.96% of my entire portfolio in this fund does raise that risk level a little bit. So once we scroll down, we can see that one of my single stock positions that I've held right from the start is CNR, and it has been hurting quite a bit, but it's one of those positions that, The CN and CP, being the two biggest railways in Canada, have a moat as far as what they do. When the economy isn't doing as well, then their returns are reflective of that. And I think that's why we're seeing this stock not perform quite as well. I suspect that over time, before I retire, that this position could turn around. So now the real question is, do I hang on to it for a long period of time? Or because I hold it within other funds like XIC, do I just get rid of that single stock position? That's something that I want to explore over the next year and figure out. Okay, so now we're in the TFSA. So the whole reason I started this channel was I wanted to build that TFSA from zero, which is where it was, to maxing that thing out. So if you're curious about how much room you have, you can just go into your CRA account and you'll find it at the very bottom, and it will tell you exactly how much RRSP room you have left, how much of your first-time home savings account you have, and your TFSA. So one thing to keep in mind, because we're at the end of the year, the institutions haven't reported how much contributions that you've made, and they give you this little warning explaining that you don't want to over contribute, so make sure that you know how much you contributed over the last year. I'm not at any risk of that, but I did make some, significant contributions, and we're closing the gap. Now, every single year, they add more money or more room to those accounts. And that's why it's such a powerful account, because the TFSA is after tax dollars. So in this case, we have $72,000 of room within my TFSA, but that doesn't account for what I contributed this year. Now, this year in 2026, we will max that account out. There's no doubt in my mind. So as soon as I get the reporting back, I will have to go in to my TFSA and start subtracting that so that I don't over contribute, because that is so important. So if you're curious about how much room you have left, that's where you're going to find all of those details. Now, my TFSA is split. Some of it's over at Questrade. I moved that money over there last year in the spring in order to take advantage of an offering they had. So basically every single month, because I move money there, they deposit some money in the account and then I utilize that money. Not gonna lie, getting it there was a major headache and I wasn't overly happy with Questrade. I think that there are some positives to their platform and maybe over time that they will improve, but for the most part, I've really stuck with Wealthsimple. And so after transferring that money, I immediately started contributing back to the TFSA in Wealthsimple. So it is split. So, but the total value, and that's the nice thing about passive, is I can look at the total value between the two accounts in one place. And in this case, it's $90,000. So you can see that we're closing in on the maximum allowable amount. Now, I did get more room this year because it was another $7,000. So my hope is in 2026, we will max that one out, and then we will start working on maxing my wife's out. Again, these are after tax dollars, so all of the growth in that account is tax free, and that's what makes that account so amazing. All right, quick global view of the TFSA starting from day one. This is the most consistent account that I have as far as data goes. So as you can see, we're trucking right along to get to the end game. And so as far as dividends and distributions go in this account, we're averaging about $100 a month. So this past month was $260. And of course, this is the all-time returns of this account. In total, this account has earned $3,341 in distributions and dividends. But I think a good benchmark is to look at the last year. So on average, we're making $190 a month over the last year as the account starts to grow. And you can see that as we have gone along, of course, we're just seeing a nice steady increase in those dividends and distributions. It's also a nice little motivator for people when they see that money coming in. So this month, as far as contributions goes, was $3,744 to this particular account. And of course, we already know that the markets weren't trading very well, so we didn't really see any growth. In fact, we can see that there were some negative returns. Again, that's totally to be expected. I am not worked up about this. I've seen this before in the short time that I've been investing, and I'm sticking to the plan. We're moving forward. I have my strategy. One of the nice things about Wealthsimple is they have a nice tool to show you how things are performing. So you can see on the day that we're up $67 as a whole. Over the last week, this account is down $290. Over the last month, down $83.14. Over the last 3 months, total return $210, pardon me. Year to date, $67. And then if we look at all-time returns, now this is from when I started the account way back in April of 2023, including the money that I've taken out, which you can see in that big dip there. The total returns on the account itself are $8,500. And we can see that there's just been a nice steady increase as far as the contributions go. So we started contributing in March of 2025, and we've been steadily adding money over time. And we're just seeing a nice steady increase in this account. Now, as I said, markets are trading sideways, so we're not seeing a lot of big gains. So if we scroll down, you can see all the different positions that I hold within this account. Now you can't tell basically how much percentage-wise, and that's why I like using the other tools, because it definitely helps me out with that. So for instance, here we can see the global snapshot of each position within the TFSA, combining the Questrade account and the Wealthsimple one. And I can see which funds are on track and which ones are lagging a bit behind. So when I put money into the account, it will then recommend which ones I should buy, which in this case, I can clearly see it would recommend XIC, XEF, XEI. And we can see that HHIS is overweighted based on the percentage that I've assigned to it in my asset allocation. USCL is one of those as well. And so I can actually ask it to tell me how many shares to sell to rebalance, which I will be doing in an upcoming video because it's the year end and I do want to do a little bit of rebalancing. All right, so we're going to look at the emergency fund. So having an emergency fund is important. I am a big proponent of having some money available in the event that you were to be laid off or you had some big bills that might have been unexpected. For us, we had some big bills this summer that we had to tackle, and we had some liquid cash that was available to us. So I think it's important to have one. How you go about it is completely up to you. How much it should be and where you keep it is, again, I think it's a personal choice. In my case, I made a choice to invest this money, and it's not as liquid as it should be. I definitely, don't just blindly do what I do. Obviously, all of this is educational information where I'm just sharing all of this stuff with you guys about how I do things, but you should definitely take the time to think about the decisions that you're going to make and don't just blindly follow people. I had built this emergency fund up from zero. It was $11,000. That's how much money was contributed to this. And over the last 6 weeks or so, I've seen a lot of movement in this account. And much to my surprise, well, maybe not much to my surprise. Maybe it's something I should have expected, but you can see here that the total value of the account as of today, and again, I'm filming January 2nd, is $11,036. This account actually was up about $300 earlier, about maybe in the beginning or in November, I guess. And we can see that with the volatility in the markets, it's changed considerably. So at least we're not below $11,000, because that would be an unrealized loss that we would lock in if we had to pull all this money out. If I sold everything and liquidated it right now, and this is in a TFSA, by the way, guys. So the nice thing about that is if you pull that money out, once the year rolls around again, you can use that space again. That's one of the nice advantages of the TFSA. So if I sold everything today, I would have made $36 in, six weeks or so since I built this fund up. So obviously I introduced Bitcoin a while ago, probably within the last 3 months, I would say. And it's a very small portion of the portfolio, but I don't see cryptocurrencies going away. And so I wanted to introduce, because I didn't have any in my portfolio. So I've been buying it. And one of the nice things about Wealthsimple, like a lot of other brokers, some of them will do this, is I can set it as far as the investment goes and not worry about it. So I have it set to automatically purchase every single week. I'm purchasing only $10 at a time right now until I, max out the other parts of the portfolio. So over the last day, this is up $2.33. Over the last week, it's up $6.87. Last month, down $5.53. And over the last 3 months, down $50. So, like a lot of assets, I bought in when it was pretty high. And of course, you need to ride that out. You need to have a plan. And the plan was, I'm going to start investing in it, dollar cost averaging. And obviously with dollar cost averaging, I'm not worried about what the price is. I just keep investing in it. But that means that I can't look at it in that lens of what's happening right now. I need to zoom back out, and I need to ride this out. I have a very lengthy time horizon left, as far as, I got 8 more years before I retire, and maybe even longer than that, as I talked about before. So I can see that this will turn around, and obviously I may adjust how much I'm putting into this as I learn more about it. Now, if you're interested to see what has gone on in this portfolio since I started, which was way back in April of 2023, you should watch this playlist right here.